In today's video, we're going to talk about how important it is once you've set up your trade plan to follow it and not allow things that happened in a prior trade or a prior day impact how you execute today's idea. So if you're interested, stick around. Before we get started and talk about today's trade, I wanted to remind you that the trade we're going to talk about was one of the most in-play stocks today. We're going to also talk about one of the most in-play stocks yesterday. The process that I go through to choose these stocks, find these low-risk, high-reward setups, is in a 2-hour free workshop. Click on the link above, sign up, 30 minutes I spend on that process, and then we also go over 3 low-risk, high-reward trading setups that we use on our prop desk in New York City. Today's trade was in eBay. We're just starting earnings season, and eBay reported a very good number. But I thought the setup warranted a short trade. And so I want to walk you through that setup and how I executed it. Before we get into that, I want to go reverse to yesterday when I traded Qualcomm on the short side and walk you through that setup and kind of show you how what happened in Qualcomm on the open yesterday impacted how I executed eBay today, and not necessarily in a good way. So yesterday what happened was Qualcomm had actually gapped higher on news that the DOJ, the Department of Justice, had urged a federal appeals court to delay an antitrust ruling. For those of you who aren't familiar, Qualcomm, maybe a month ago, had an unfavorable court ruling. The stock got crushed. It actually had come back quite a bit over the last few weeks. And about a week or two ago, sold off pretty hard from $80. And then this news broke yesterday that the DOJ was interceding. It seemed very odd to me, very unusual. But the more interesting thing from a price standpoint, was the stock was gapping up in the pre-market to around $80, where it had sold off pretty hard from a couple of weeks ago. So this was not, the news item wasn't a fundamental shift in a big class action settlement like they had with Apple that drove the stock up from $50 to $80. They hadn't raised guidance. There wasn't really a real catalyst, fundamental catalyst to drive the stock higher. So my first thought was, sold off hard a couple of weeks ago from 80. Let's look to see if it fails there. We'll trade it for a move back down to 77. Here's the 30-minute chart. You can kind of see that's actually how it played out. I did short it. It did go down, worked very well. But if we zoom into it, what you can see is in the pre-market, or I should say the after hours the prior day, when the news came out, it drove up to 80. The next morning we came in, other people were thinking the same thing as me, probably shouldn't be up here at 80, and they were selling it at 8 in the morning in the pre-market. So by the time the market opened, it seemed unlikely I was going to be able to get a full trade size on up at $80. So what I decided to do was scale in very slowly above 79.25 as it got closer to 80, build up my position, and actually trade it that way. And so you can see right on the open, it spiked up to around 79.30. My first offer got taken, and then it reversed really hard, went down about $2.50. So I wasn't able to build up full size, and like these things happen, right? The idea was good. It played out. If you weren't building the large position in the pre-market, you didn't really have time to you didn't have the ability to put on full size, and so you were going to capture the down move, but with not as much size. And so coming into today, that was still on my mind, and I just wanted to set that backdrop before we start to talk about eBay. So here is eBay in today's morning game plan. Second idea, first idea was Netflix reporting numbers. The reason I skipped over Netflix was I didn't have a strong view either way. I thought maybe it would bounce off S1, maybe it would short off of R1. And so it just wasn't great either direction in my view. So I went down to number 2 and number 3. Number 2, eBay, I really liked it on the short setup. So let me explain this one to you, because I don't think this is too commonly known. So in this case, eBay reports what appear to be very good numbers. They beat their earnings by 6 cents, which was a pretty good percentage beat. And then they raised guidance for the year, fiscal year 2019, by 1%, which was exactly 6 cents, the beat for this quarter. So all the headlines are eBay raises guidance and people get excited, the stock's gapping up. But the reality is, when a stock beats earnings for a particular quarter by a certain amount, and then they raise guidance for the year by that exact amount, they're not really making a bullish case going forward. What they're basically saying is, we had a good quarter right now. Going forward, we're just raising our guidance by the amount we just beat by. So they're basically saying we can hit the numbers for the rest of the year. They should come in line. And that's not necessarily bullish because the market is forward looking. The market wants to hear, going forward, we're raising guidance. Or in the opposite direction, going forward, we're going to miss. That's why sometimes when companies miss their numbers for the quarter, but they don't guide down further, you'll see them bounce. People get confused by that. So the fact that they didn't raise guidance by more than the amount that they just had beat, and it was reacting very strongly, combined by the fact that the stock had already bounced over the last 6 months from the mid-20s up until about $40. When I put all that together and it was gapping higher in the pre-market, to me, this was a very good risk reward on the short side. And that's what we talked about in the morning meeting, and I'll post that on the blog in the next day or so. So here's the chart. You can see last year it sold off from 45 all the way down to 26, bounced with the market in January, consolidated in the mid-30s for a couple of months, and then broke out coming into earnings, or started to trade higher coming into earnings very tightly, just below around $40 a share. And so the news comes out. Here's the 5-minute chart. It breaks to the upside, goes up to about 41.5 in the after hours. You can see 41.75 actually in the after hours, and then it fails 41.75. And so I have 41.50 to 41.75 on the morning game plan sheet. We can see that as our spot there where we want to short it. If it takes that out after 10 o'clock and it's still above, like there, above 42, maybe it'll go to the next resistance. But if it fails there in the first 15 minutes, right on the open, we're going to look for it to come down to S1, which is 40 to 40.20 on the sheet. And then maybe it'll come down even to S2, which I think was into $39 a share. So what happens is, if we zoom in, I have another zoomed in chart for you. What happens is, this is the 1 minute, right on the open, it drops out very quickly to $40 and about 40 cents, $40.50. And so I was not able in that first minute to capture a quick pop to the upside and short it into that 41.50 to 41.75 that I liked. And so when it dropped out very quickly to 40.50, as soon as it got back above 41, I started to pretty aggressively short it. And that was not the plan. The plan was to aggressively short it between 41.50 and 41.75. And if it started to hold above 42, get flat and then reassess the situation. So what you can see is on the 1 minute, goes down quickly, pops up very quickly on the next bar to around 41.60, but I was already shorting it at 41.20, 41.30, 41.40. By the time it got into that 41.50 to 41.75, I almost was at full size, so I didn't really have a lot of wiggle room. And then you can see for the next couple of minutes it pulls down a little bit, but it makes a higher low, and then eventually at 9:45 tops out at 42. So I was in a position of weakness. I was short the stock. I wasn't covering. I was still sticking with my plan to not cover unless it started to hold above 42. But by the time it started to come back down and start to hold below 41.50, I was still basically out of the money. If I had been a little bit more patient and only put on a quarter size in that initial pop up to 41.5 and waited for it to kind of move up higher and get very aggressively short there, I would have been in a position of strength. And that's kind of half the battle. And so just to make sure you understand, yesterday in Qualcomm, it topped out in the pre-market. It came in. I recognized that it might make a higher low, so I went in very small because I didn't want to miss. If it started to come off, I didn't want to miss the trade, so I was in there. This morning, first move was down, and I said, uh-oh, here we go again. Maybe I'm not going to even get into the trade at all. But that's not what you're supposed to do. Sometimes the reality is you're not going to be able to get in the spots where you want to get short or the spots where you want to get long, and it's a pass. That happens sometimes. There's plenty of opportunities. The market is open every day. If you can't get in the prices where you think the risk reward is good, especially on the open where you have a lot of volatility during this price discovery before the trend starts, wait. And after 10 o'clock, if it's failed, and this is what actually happened in eBay, what you can see is here's the next chart. Look at what happens when we zoom out between, looking at the open and then all the way to 11 o'clock. It fails at 9:45, puts in the high, And then by 10 o'clock, it's below 41.50. You can see I had the blue line there. And it's below that, use the pop back up to 41.50 to short, which is actually what I did. And the sellers are in control at that point. On the chart here, I put buyers in control if it's holding above 41.50. Sellers are in control when it takes out that 40.80 and eventually trends to lower prices. But didn't need to be so aggressive on the open below that blue line. Could have waited to higher prices or waited for it to reverse and fail and hold below the blue line. And that's it. I've been doing this for a long time. Sometimes I'll think about things that happened the day before and maybe get a little bit too aggressive or a little too tentative. But the idea of coming up with these game plans before the market opens and understanding what the resistance areas are, what the support areas are, and what the time of day is, understanding the first 15 minutes price discovery can have some wild, big gyrations. Then 10 o'clock, step back and assess. By 10 o'clock, we had already seen, okay, it was back below our resistance area. It was coming into the morning low, and if it makes a couple of lower highs and lower lows, we can just work our way into a position as it's tightly consolidating there in the 41 area, and then when it breaks below 40.80, we play it for a move down to S1. And then if it starts to consolidate below S1 after 11 o'clock, we can play it down to S2, which eventually that happened a couple of hours later. So to recap, we pick the best risk-reward stocks in the pre-market, as I said. Check out tradingworkshop.com. That's where we go over it. I spent 30 minutes doing it. Once we have those stocks, we identify multiple support and resistance areas, and we understand that most of the setups, they're going to trade between S2 and R2, and the stocks will gap into areas. We'll identify S1, S2, R1, R2. We'll trade those ranges, and then occasionally something will have such a strong catalyst that it will gap and then trend for the rest of the day.